How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing a quick M1 Finance portfolio update, going over any changes that I've made in this portfolio from the previous update video, which was around at this point 2 to 3 weeks ago. And I want to just go over what's going through my mind right now from a long-term perspective. What stocks, what ETFs am I focusing on? Because many of you all know I'm a short-term trader, right? I pull income from the stock market via swing trading mostly, right? And with this income, I pay my bills, I live my life, right? And I also put some aside for longer-term investments, such as the ones that you're going to see here in this video. And this portfolio is mostly a dividend growth portfolio. I do have some names here, like many of you guys know if you've been following this series since back in July of 2019 when I started it. I do have some names here that are growth plays. They don't pay dividends, but most of the stocks here, most of the ETFs, well, all of the ETFs, they pay dividends. So let me not ramble. Let's just get right into the video. If you guys enjoy this video, hit that like button and also consider subscribing to the channel if you want to see further content like this, and check out the M1 Finance series playlist down below in the description box if you want to see where the portfolio started and how it got to where it is today. So today, as you all can see, this is my portfolio. It's currently valued at $2,193. Well, actually, it's valued at around almost $2,400 because I do have $200 sitting in cash right here with 4 pending buys that we'll go over here in a couple of minutes. And since the inception of the portfolio, like I said, back in the beginning of July of 2019, the money-weighted return here is 20.93%, with the total gain being $146.86, or 82 cents rather, with $131 coming from market gains and around $14, really around $15 being from earned dividends. So it's obvious, guys, when your portfolio is smaller, you're not going to be pulling in as many dividends, right? But that's not the point. The point is to build it while it's small, continue adding money into it, so in 5, 10, 15 years from now, that's when I'll be pulling in a pretty nice amount of dividends per month, per quarter, per year that I can do whatever I want with. Sure, I can pay bills with that. I can go on a vacation with those dividends, or I could just reinvest those dividends back into the portfolio and get even more dividends, right? So before we do jump into the activity tab here, let's quickly go over the individual holdings, the individual slices here that I do have in my M1 Finance portfolio. And guys, I'm not going to spend too much time on all of these because you can see I now have about 19 or 20 holdings here in this portfolio, and it will take about 20-30 minutes if I were to go through every single one in depth. So let's just go over them pretty quickly here. So the first holding here is SPHD, which is a low volatility, high dividend yield ETF. And this is mostly focused on the sector of real estate, right? I believe it's 20% in real estate, about 19, maybe 15 to 19% in financials. Those are the two heaviest weighted sectors in this ETF. And for me, I want it at 10% of my portfolio because it's more stable, right? Its beta here, I believe, is less than 1. I'm pretty positive it's less than 1 here for this ETF, meaning that it is less volatile than the market, and it's also paying a nice 4% dividend yield, as we can see down here, 4.17% to be exact. So is this going to outperform growth stocks? Probably not, right? But it's going to be more stable, and it's going to pay you a monthly dividend, which for me, I really like, as this is more of a dividend growth and a dividend-focused portfolio. So these next 3 holdings that you see here, Altria, ticker symbol MO. This is a very high-paying dividend company, right? This is a company that pays, at this point, a 7.3% dividend, which is absolutely insane, right? And they've been having a bunch of trouble with their main business, seeing really a decline in volumes, and their main business being cigarettes, as well as e-cigarettes being under heat, with Juul being heavily in the spotlight here. These have been crushing, or really these two facts here have been hurting the stock of Altria. And for me, I view this as a buying opportunity, which is why currently it is the second biggest position of my portfolio. But as you all can see, it's supposed to be around 4%. I've lowered it to that. So over the next couple of months, it's not going to be the biggest position or the second biggest position. It's slowly going to drift down to around 4 to 5% of my portfolio. So the second one, or rather the third one here, is ticker symbol O, which is a REIT, Real Estate Investment Trust, right? And this is one that I personally love, currently up around 10% on this position. And this is also a monthly paying dividend investment, right? And do more research on all of these stocks, guys. Don't buy anything based on the fact that I hold it in my portfolio. You have to understand and do the research on yourself by yourself before you can invest in it yourself, right? So the next one here we're seeing is Johnson & Johnson, up 20% on this one. If you guys have been following my channel, and I've been saying this on a bunch of my videos, I've been buying J&J from between the 120 and the 135 range. My average cost right now is around $130 on this company, and my dividend yield is a nice 2.5%. So let's speed through the rest of them here, right? We have most of them being around 4 to 5% in terms of the goal of the portfolio. And SPYD is the next holding you see. This is another high dividend ETF. Not necessarily a low volatility one, but this is mostly just one capturing the S&P 500 and individual stocks in the S&P 500 that pay a higher dividend yield, right? And below that, you see Boeing, you see Duke Energy. This is a utility company. Boeing is an industrial that's been seeing a lot of heat recently. And me personally, guys, when I see a company that has a very strong economic moat that I personally believe in long term, when I see a company like that under heat, under short-term pressure, I like looking into it to potentially invest into it, right? Because we've heard the Warren Buffett quote, be fearful when others are greedy and be greedy when others are fearful, right? And people right now are clearly fearful when it comes to Boeing stock and a lot of these other stocks that we're going to talk about here in my portfolio. So Duke Energy, more of a stable company here. This is a regulated utility, pays around what, 4% dividend or something like that, 3.6%. And this stock, guys, I bought it at $93 per share, and I timed it pretty well. It doesn't happen like that always. Really, it's impossible to time the market. But for this one, I timed it pretty well, bought it before a bunch of people started flooding into it due to the fear in the market from the CV, that virus. I can't say it because my video might get demonetized, but that's been pushing a lot of fear into the market. People have been flooding to more safe companies like Duke Energy, ticker symbol DUK. Facebook, no need to explain that. That's around 5% of my portfolio. Wells Fargo, this one I'm adding a little bit more to because they just settled for $3 billion regarding to the scandal from a couple years ago. So that's good. The stock actually pumped up a little bit yesterday in Friday's session. 3M is the next one here, down a bit on this position. Probably won't add to it here for another maybe a couple weeks. The goal is to get to a 4% stake in 3M here. And the next one is going to be yet again another healthcare company, AbbVie, ticker symbol ABBV, and I'm up 40% on this one. That is insane, guys. Up 40% in terms of a money-weighted, return here on AbbVie, and you can see average price is around $78. It's currently trading at around $94. So McDonald's is my next holding. No need to introduce that. Arguably, this is a real estate company, right? That's arguably what people say, or a lot of people say it's a real estate company, which is true. They have 30,000 locations globally. That is pretty insane, right? Disney just came back from Disney, and let me tell you guys, those parks are still packed. That place is insane. This is one of the stocks that I've said on this channel before that I really feel comfortable holding until the day that I die. As cynical as that sounds, I feel like I could hold this for years and years and years. This is not going anywhere in my personal opinion. PYPL. This is a play in fintech where I personally believe is the future, right? I've said on this channel before that I run a little eBay side hustle, have been for the past, at this point, like 10 years, and I've used PayPal for that as my payment provider, and I mean, I've just used it with friends and family for such a long time now, and I think it's here to stay, and it's the future, right? Amazon, this is a company, no need of introduction, right? That's about 5% of my portfolio. AT&T around 4%, which is really, at this point, not too big of a dividend growth company. They're only growing their dividend by 2%, but they have a very, very good current yield of around 5 to 6% last time I checked, and that's not bad, right? This is one that the dividends I'll probably reinvest back into, let's say, maybe, the ETFs that I own as my top 2 holdings here, which you'll see that the last one here is one that I just added, right? So VEA, this is a developed markets ETF. This is one that I've owned here since the inception of this portfolio, and this is really to get exposure to markets outside of the United States. I think that's extremely important. If you're too really concentrated in one country, that's not good in my opinion. If you want a long-term portfolio, this is kind of like the Ray Dalio approach. You want to be global, and in my opinion, you also want to have gold, very similar to what Ray Dalio thinks. I really like the way that he constructs his long-term portfolios, and I've definitely taken some philosophies from him, being one of the best investors of all time, right? And GLD is one that I really like, and this goes into the gold exposure of my portfolio. This is an ETF, a SPDR Gold Trust, and it's really to hedge against the stock market, to have a bit of really, what's it called, guys? Precious metals in my portfolio. You all can see I bought this at $140 per share, and now it's at about $154 per share. So as some equities in my portfolio have been falling recently as there's been more fear in the market, well, gold has been going up. I'm up almost 13% on this position, and it's around a 3.2% of my position here, with the goal of it being around 4%. Now, this last one here, ticker symbol DGRO, this is one that I just added literally yesterday, and I have pending buys for it right now. And this is actually one that my buddy Andrew actually shouted out to me, and this is the beautiful thing about the investment community, guys, because it's impossible to know every ETF, and people commenting in my comment section, sending me DMs, they always give me new ETFs to look at. And this one, again, my buddy Andrew told me about this, and he actually has a YouTube channel. I'll link it down below in the description box because I like giving credit where credit's due, right? This is one that I looked into, again, from that reference, and I really like it. It kind of fits the goal of this portfolio. And if we just look at DGRO very quickly here, actually, I could probably pull it up on here easier. We can see, if we go to the details, this investment seeks to track the investment results of the Morningstar U.S. Dividend Growth Index SM. The fund generally will invest at least 90% of its assets in the component securities of the underlying index. And if we go over here more in depth to see kind of what companies this holds, it holds Microsoft, Apple, Johnson & Johnson, JP Morgan, Verizon, Chevron, Procter & Gamble, Pfizer, Wells Fargo, Home Depot. Those are the top 10. And another reason why I like this, not going too deep into it, but just looking from a bird's eye view, right, is it's heavily in information technology. And a lot of the ETFs I own, I think none of them are heavy in information technology other than this one. So this is more of a play on not really current yield, obviously, but more the yield in the future, because it's focusing on companies that are growing their dividend yield pretty quickly now, 10, 20% on a 5-year compounded annual growth rate that will pay a nice dividend in about 10 years, which if you guys saw, really paid attention a couple minutes ago, I said the goal of this portfolio is not to get a nice yield, a lot of dividends now, but to get a lot of dividends in a couple of years from now. So let's hop into activity very quickly, guys. In the month of February, I haven't gotten too many dividends. Let's go to this activity type. Let's do dividends only. We can see I've only gotten about, what is that, like $2 in dividends, maybe $1.75 from AT&T, AbbVie, and Realty Income. And my goal with this portfolio, like I said in my beginning of 2020 video, is to put in at least $500 per month into the portfolio minimum, because in 2019 I slacked, guys. You know this. I only put in, and you'll see it here, let me show you my funding history, I only put in around $950 in the year of 2019, which is not good. But as of 2020 so far, being in the middle of February, I've already surpassed that with $1,200 being put into this portfolio. And you guys can see it right here. If I just simply go to the deposits and withdrawals, this month alone, I've already but I've met my goal of $500 deposited, with a deposit literally yesterday being $21. And speaking, or not $21, $200. And speaking of that $200, to end off this video, let's talk about those 4 buys that I currently have right now, placed for this upcoming trading session. We have $30 of VEA being bought, which again is that developed markets fund, ex-US fund that I talked about, $25 into Disney, $80 into DGRO, which again is that ETF that my buddy Andrew shouted out to me. Again, his channel's linked down below in the description. Tell him that Stas sent you. And $25 into Wells Fargo, totaling $160. So right now, guys, that's kind of what I'm working with here in terms of the portfolio. $160 of stock is going to be bought here on Monday, with $40 remaining in cash that I'm looking to see what I can do with, right? I'll wait maybe to buy a little bit more Realty Income, although it's not at a great value anymore in my opinion. Maybe I'll just sit on it in cash and buy more SPHD if this market does see a bit more of a sell-off, right? Because that's where I like to buy in this market. And that's really it, guys, for this video. I hope you all enjoyed it. If you did, feel free to go down below and hit that like button, and also consider subscribing to the channel if you want to see further content like this. And if you guys actually want to sign up for M1 Finance, I know it's not crazy, but if you fund your account, you can actually get, I think, $10 right now with my referral link down below in the description box. And honestly, who doesn't like free money? And me personally, I love free money, and I love M1 Finance for long-term investing. So if you're looking for a long-term brokerage, guys, no fees, this one could work out for you. So go check out that link down below. I appreciate all of you guys taking the time to watch this video. Have a great rest of your weekend. Peace out.